Imagine if instead of setting goals, you could build a system that works for you day in and day out. What if I told you that successful investors don't focus on goals, they focus on systems? And that's why they outlast the market's ups and downs. Did you know that over 90% of active investors underperform the market over a 10-year period? That's right. Most people chase returns without a clear strategy and end up losing money. Yet, Warren Buffett, one of the wealthiest people in the world, doesn't chase goals. He follows a system that's been honed over decades. His secret isn't about big wins, it's about consistent, smart moves. In this video, I'm going to show you how to shift from goal setting to creating a system that works in the long term. You'll learn how to evaluate stocks, build lasting habits, and improve your investing mindset. No more stress, no more chasing the next trend. Instead, you'll be in control with a method that helps you succeed no matter what the market does. Ready to unlock the secret to long-term wealth? Let's dive into the system that can truly change your life. Chapter 1. The secret behind systems versus goals. Why it matters for investors. When it comes to investing, many people focus on setting big goals, like doubling their money or hitting a specific return target. But what if I told you that focusing on systems, not goals, is the key to long-term success? Goals are often finite and can lead to stress when not achieved. On the other hand, systems are continuous and adaptable. In the world of value investing, systems ensure that you're always moving forward, regardless of short-term results. Warren Buffett famously said, "The stock market is a device for transferring money from the impatient to the patient." The patience in investing comes from trusting a system, not obsessing over short-term targets. Systems can be built on small, repeatable steps, and that consistency is what makes you successful in the long run. Chapter 2. Mastering the market with consistent habits. The power of small wins. One of the biggest advantages of systems is the power of consistency. Think about it. How do successful investors like Buffett and Charlie Munger stay ahead? They focus on habits that compound over time. For example, reviewing a few potential stocks every week or tracking industry trends regularly can build a solid foundation for long-term gains. These small wins can build up to huge success. According to a study from the Harvard Business Review, 90% of high performers in business focus on building daily habits. If you want to be a successful investor, it's about the small daily steps, not chasing big wins. The magic happens when you stick to a system, allowing you to make better decisions without the emotional rollercoaster of chasing the next hot stock. Chapter 3. The compound effect of systems. How little steps lead to big result. You've heard of compound interest, right? Well, the compound effect of systems works the same way. The key is consistency and taking small actions every day. Over time, these actions multiply and lead to massive returns, just like how the interest on your investments grows. For instance, reviewing a stock's earnings reports or comparing price-to-earnings ratios every month may seem small, but over the years, you'll build a thorough understanding of a company's worth. In The Slight Edge by Jeff Olson, he emphasizes that small, consistent actions lead to extraordinary results. In the case of investing, that could mean a 10% return on your portfolio or, better yet, finding the next big undervalued stock. The compound effect applies to both your knowledge and wealth when you focus on a system. If you're enjoying this approach to long-term wealth, don't forget to hit that subscribe button. You won't want to miss the next chapters where we dive even deeper into building your system for investing success. Chapter 4. From reactive to proactive. Creating a system that works for you. Many investors react to the market. When stocks drop, they panic. When stocks rise, they chase. But what if you could flip the script and be proactive instead of reactive? A proactive system means making decisions based on your criteria, not market noise. For example, instead of jumping into the latest hot tech stock, you set up a system that evaluates each stock based on fundamentals, such as revenue growth, debt levels, and competitive advantage. This process keeps you from emotional investing. It's a strategy that works well, especially during market volatility. According to The Intelligent Investor by Benjamin Graham, the investor's chief problem, and even his worst enemy, is likely to be himself. By building a system, you can reduce the risk of emotional decisions. Focus on creating a framework that works for you, and stick to it regardless of market swings. Chapter 5. The system for evaluating stocks. Creating your personal investment framework. Now let's talk about what a practical system might look like. Instead of diving into the stock market blindly, build a system for evaluating stocks that reflects your values and priorities. A good place to start is by developing a checklist for potential investments. Ask yourself key questions. Is the company profitable? Does it have a sustainable competitive edge? Are its financials solid? Buffett himself uses a circle of competence to evaluate stocks. He sticks to industries he understands and trusts his judgment. You can create your own circle of competence and build a system that revolves around it. For example, if you're interested in tech, focus on metrics that matter for tech companies, like R&D spending and user growth. Having a system in place for these decisions means you're not gambling, you're investing with purpose. Studies have shown that structured decision-making, like a personal investment system, significantly reduces the likelihood of poor investment choices. Before we get into the final chapter, make sure to subscribe and stay tuned. If you want to create a system that works for your financial future, you don't want to miss this last piece of the puzzle. Chapter 6. Beyond Profits. How systems build a mindset for long-term success. Creating systems isn't just about profits, it's about shaping your mindset for long-term success. The system-based approach to investing builds emotional resilience. When you focus on the process, rather than an outcome, you can endure market fluctuations without panic. In fact, research from the CFA Institute shows that investors with a process-based approach perform better in the long run compared to those who focus solely on returns. Having a system also means that you're constantly improving, learning from mistakes, and adjusting as needed. Systems are fluid, they evolve as you gain more knowledge. This mindset of continuous improvement is what separates successful investors from those who chase trends. Whether it's refining your stock evaluation system or rebalancing your portfolio, the ability to adjust without stress ensures long-term growth. Systems don't just make you a better investor, they make you a better person. By focusing on systems, you're embracing a holistic, long-term strategy that leads to sustainable growth. Instead of obsessing over goals like, I want a 20% return this year, you're committing to the system of daily actions, thoughtful decisions, and constant learning. And that, my friend, is a system that can change your life. Don't forget to subscribe for more insights and strategies to build a system that works for your investing future. Thanks for watching.